Hello everyone, welcome back to my channel. So this video marks the end of the week number 83 in this road to 100k realized return challenge. First of all, I must apologize because there was a delay in my ability to record and post the video. It was a hectic weekend for me. There were many things going around, and so I could not really record it before this evening on Sunday, and so my apologies. But I'm sure that each and every one of us had plenty in hand to be entertained given the events that took place over this weekend. But we'll get to that soon. So the week was a rather negative one for the major indexes for several reasons. But let's start first of all by the economic data as usual. And so starting here, there was nothing else. There was nothing here major on Monday except for the factory orders, which came pretty much negative. But this did not make too much of a difference in the market. There was a slight impact, but nothing really major about it. But then also here on Tuesday, there was some positive news. The consumer confidence came more positive than expected, and looking at the the actual news piece, this is something that it's also gives you more insight about basically what's behind this reading. And so this points out that mainly the most of the increase in the consumer's confidence was in about the younger consumptions, the younger consumers. And here, as you can see, this is also another sign that, again, just like the University of Michigan Consumer Sentiment Survey, the biggest increase in confidence happened amongst the households which are higher incomes, and consumers with lower incomes have the most deflated expectations about the future of the economy. Again, another increase which is noticeable is the number of consumers that said that jobs are hard to get, and this is the highest level, 20.6, the highest level since February 2021. So really in the aftermath of the COVID-19 pandemic. And here it says that there's some slight expectation that the unemployment rate may increase slightly in the future. Buying intentions were mixed, but pretty much this is the main takeaways from the consumer confidence reading. Now, moving on to Wednesday, and this is when things start to get interesting, because on Wednesday, even though there was mostly Fed speak, so nothing really remarkable, but we had the earnings of Nvidia coming out after the market close, and this is something that is another case of buy the rumor, sell the news. As you probably know, this market saying in which the market builds up ahead of an announcement, in this case the Nvidia earnings, and once the announcement comes out, the stock is basically trashed, even when the news are positive. And this is exactly what happened with Nvidia earnings. There was a expression that it was spoken all around the media, which is a blowout. There was an absolute blowout in revenue and earnings, as you can see here. Earnings per share were soundly beaten, but against the analyst expectations, and also the revenue. And so even the guidance was also better than expected. Nvidia said revenue for the fiscal first quarter will be 78 billion, plus or minus 2%. So if you compare with the previous quarter, so Q4 2025, this is an increase of over 10%. I would say it's about 13 to 40%, 13 to 14%. And so this is from a quarter to quarter, this is a very big one. But despite all that, I think that this can always happen, but for sure, and even myself, I was not expecting that the reaction that would come. But I'll show you what happened in a few seconds. But then jobless claims came more or less in line with what was expected, 212,000. So nothing really out of the ordinary. But here came also a very big negative news. Now this number is not correct because actually, and this is the correct news piece here, core wholesale prices rose 0.8% in January, month on month, right? And this is the core. Here, as you can see, this reading is incorrect. This is not 0.3, this is 0.8, and so this is a huge increase relative to the previous month, which was 0.3%, and also it's a very large increase relative to the expectation of the analysts, which was half of it, 0.4%. And so the numbers on year were correct as by the market watch here. So, but even so, 2.9 and 3.4, this is something that is it's not really good news for the folks that were hopeful that an interest rate cut could be on the cards for the next few months. And so here you see that the headline posted a 2.9% gain year on year, full year 3.6% with the core. Again, the core here is not correct. It was not 3.4, it's 3.6, even though the headline was 2.9. And understandably, the markets did not like this number. Construction spending, this is something that didn't make much of an impression in the market. And also the tensions about the US between the US and Iran were started to build up already on Friday, and that also added up to the negative sentiment in the market towards the end of last week, and that reflected, of course, on the stock market. But with that being said, here is where we stand in terms of the Fed funds futures. So they are basically expecting with near certainty that interest rates on the meeting later this month on March 18th will result in no interest rate cuts. Interest rates will remain the same in the interval between 3.5 and 3.75%. Now, moving on to the trades that we did. Again, on Monday, I already spoke about it in the previous video. We basically sold a put on the silver miners at SILJ, which is, as I mentioned, on silver miners, and we sold again the two calls on IWM, but only on up until Wednesday, which was the date in which Nvidia would release their earnings. Now, the things remain unchanged on Tuesday, and on Wednesday, because we were able to with some buying power to take some advantage of the Nvidia earnings coming up later in the day. We bought back these puts here because they were almost worthless. They would expire at the end of the week, these puts on ARKK, but because the ARKK started to rise quite a bit over the course of the week, and at some point they even got very close here to the they got over the 74.50 mark, but this is around the time in which we bought back those puts at 63.5 strike price. Because of this huge gap, the puts were almost worthless. As you can see, we bought them at 3 cents a piece, and then we used the buying power that we had left to sold a put on Nvidia. And keep in mind that we were quite conservative because by the time we sold the put here at around this time, yes, the price was around 195, all right, and we went pretty conservative and we sold the put with 180 strike price. Here, as you can see, we received $1.30 per share, and that means that we were basically locking in profitability, because keep in mind this is on a Wednesday and the puts would expire 3 days later, actually, on Friday, counting the entire day of Wednesday, Thursday, and Friday, and we still managed to collect a return of 87.16%. So this was quite good. And we were also counting that the price may come down, but we were not expecting what would happen with the price of Nvidia in the coming days. And here, as you can see, this finished the week at 177. So the put was assigned to me. We bought the shares at 180 because here this was a huge drop. This is a drop of more than 4%. All right, and then this is on Thursday, and then Friday followed up with this gap because of the PPI reading, and continued to go down. So it came down again almost 4%. So with on average, two drops of 4% each, the stock went. The put went in the money, and we were assigned. And when I mentioned that we were quite conservative, these puts were around 13 delta puts, so they had a probability of profit of around 87%. So we were quite conservative, and so we managed to get a good return on it, but yeah, to no avail. Now, still moving on to the other trades that we did. And Nvidia here, yeah. By the end of the day on IWM on Wednesday, IWM at some point these calls that we sold actually they were in the money. I think they were briefly in the money, if I'm not mistaken. No, they actually. So this is 26. No, they were very close because this is our this was the strike price, and they were very close. But still, this means that because the price at which we sold, because we here on Monday we chose not to sell for the whole week, but we just sell calls with 3 days of expiration. Because this price here was higher than the price around here, that means that it was a good decision to do only a 3-day call and then roll over to the rest of the week, because this price is higher. So that means that we managed to collect more premium out of it than we would probably have on an adjusted basis of return than the premium we would have got here. So this was a good decision. Ended up being a good decision. Of course, you never know, but this ended up working out well for us. And we sold again 2 calls lasting the end of the week. And I was very hopeful that this would be it, because the stock on Thursday ended up here at around 266. So probably if we would have sold a 0DT option or a call expiring on Thursday, probably would have been assigned. We don't know, but yeah, because we sold for the end of the week to capture the volatility that would come from the PPI reading. Yeah, basically this turned against us, and the put and the calls expire worthless at the end of the week. But still, on these calls we managed to collect, and this is the calls that we got, and we managed to get around a little bit less than 51% return, which was quite good. Could have been better. When we first input the trade, the calls were around 130, 125, but because there was a slight pullback at the end of the session on Wednesday, we could not get that price, and so yeah, we managed still to collect a pretty good premium, but not as much as we could have got. Now, for the other days of the week, because we still had some buying power left with all these premiums that we received and all that, we still managed to sell on Thursday another put for the silver miners, the SILJ, the SILJ, but this one would expire at the end only of the week, and we still got I think a pretty good premium, 41 cents. So if we manage to leave this one expire, we would get, let's see, I think we'd still get a pretty good return. Yeah, close to 48%. So this is still quite good, annualized of course. But we will see what we will do. Now, there were no more trades. We did nothing on Friday. We were I was not sure if that was the best move to just let him expire or roll over to the next week, but because the markets were coming down so much, these calls, if rolled over, would have been rolled over at a very low premium, and if there was a recovery now this week that will commence tomorrow, we would have left money on the table. Of course, we could have not predicted that the US would launch and together with Israel would launch a strike on Iran. And given the situation, I'm pretty confident that the markets will open very much in the red on Monday, and so we will probably get even less premiums to start the week, and so I'm expecting that the next week will be a very, very bad one for us, in the sense of the premiums that we will get will be very, very little. Yeah, but that's the way it is, because as I mentioned, because of all these drops that the Nvidia had, the put was assigned, and so we were forced to buy 100 shares of Nvidia. All the rest expired with no value. These calls that we had on Qs, on the RKK, and on IWM as well, and the put that we also had on SILJ, yeah, that was expiring at the end of this week, also expired worthless. And so overall we managed to collect, so let's see which have the expiring date for this week. This does not. Oops. So this one on 25 as well, 25, this is 20, so it was last week, it was the other week, and this one, and this one. So basically we collected a little over 1,084 cents, and $1,084.44, and yeah, this was, yeah, I would say it's a positive week given the circumstances, but I'm very, very sure that next week will be nowhere near, and it's going to probably be one of the leanest weeks we ever had in this challenge. When it comes to the cost basis of our shares, our Qs, remember, if we bought those at 630, the market never returned to this value, to this share price, and so but currently our shares, the cost basis of our shares, if we discount the premiums, if we include the premiums, we would be able to break even with a 610.60 price, sell price, and this means that we almost collected $20 per share, and 500 shares. That means that we, in premiums from the calls, we collected almost $10,000 on these shares, which is not that much given the fact that we have these shares for already 4 months, and this is a quite large capital commitment. But yeah, eventually we will be able to sell them. These shares of IWM have now a cost basis of 257, so we already received close to $9 per share, and so with 200 shares, yeah, this is almost, this is almost 900, 900, yeah, $1,800 per overall in premiums from the calls. This one as well, this is almost $2 per share that we already recovered from premiums with the calls, and so this is our 300 shares, so this is almost $600 in premiums. And now, of course, we just receive $1.30 for the premiums for these Nvidia shares. We have to put this in yellow because this is now shares that we have to get rid of. Next week, if this event over the weekend did not happen, probably we would try to sell calls at 185 or 187.5 to get some capital gain, but the way things are, I'm not sure if this is going to be the case, because I'm expecting that everything will open pretty much deeply in the red. But yeah, we'll see what's going to happen. And I think that is pretty much it. We'll brace ourselves and hang on for dear life next week. But for the time being, feel free to leave your comments in the comment section down below. One last thing. This is negative, of course, because we have to convert some of our euros into dollars because of these shares of Nvidia. We do not have enough dollars, and so because of this conversion, probably our progress towards the end of the challenge will not be exactly this $1,084 because of the conversion. There might be some gains or some losses in terms of the conversion to the exchange rate, but we'll see. Also, I'm available on LinkedIn in case you need to ask me any questions, and as always, feel free to like the video and subscribe to the channel, and we'll reconvene either tomorrow night or on Tuesday morning to start the week number 84 of this challenge, and I'll see you there.